Welcome to the Explainer. If you've ever stared at a trading screen full of flashing numbers and thought, what in the world am I looking at? You're in exactly the right place. Today, we're diving straight into the foundational roadmap of Forex and CFDs. We're unpacking the book Forex and CFD Trading for Beginners to take a highly complex, kind of intimidating topic and turn it into a crystal clear journey for you. No heavy jargon, just the essentials.
Here is our roadmap for today. 1. The world's largest market. 2. The mechanics, CFDs, pips, and leverage. 3. Who moves the market. 4. Charts and analysis. 5. Protecting your capital. And finally, 6. Starting your journey.
All right, let's jump straight into Section 1, the world's largest market.
You know, this market didn't just magically appear overnight. It's actually evolved big time. We're talking from pre-modern trade origins, where people were quite literally swapping physical goods, to the setup of formal global exchange systems, right up to the ultra-fast, modern digital market that we see on our screens today. It's basically a living, breathing network that just kept adapting right alongside human civilization.
But before we get lost in the weeds of trading strategies, we really need to define our arena. Simply put, the Forex market is the global decentralized marketplace for the trading of currencies. And hey, that word, decentralized, that's the key right there. Unlike the stock market, which has a central physical hub like Wall Street, Forex is this massive global electronic network. It's running 24 hours a day, 5 days a week.
Moving right along to Section 2, mechanics, CFDs, pips, and leverage.
Okay, the absolutely crucial concept to grasp here is the CFD, or contract for difference. Think of it like this. A CFD is essentially just an agreement to exchange the difference in value of an asset between the exact time you open the contract and the time you close it. It's your primary tool to navigate price movements. And the best part? You don't ever have to actually own or hoard the physical assets. You don't need barrels of oil sitting in your garage or stacks of foreign currency under your mattress.
The contrast between this and traditional trading is actually pretty striking. With traditional stock buying, you buy an asset, hold on to it, and really just cross your fingers hoping the price goes up. You only profit if the market rises. But with CFD trading, you're just speculating on the price movement itself. That gives you this incredible, unique flexibility to potentially profit whether a market is going up or crashing down, simply by taking a long or short position based on your analysis. It's a total game changer.
So let's break down the raw building blocks of a trade. First, we have pips. These measure the tiny incremental price movements in currency. Then, lots determine your overall trade size. And then, well, the big one, leverage. Leverage literally multiplies your exposure to the market. It lets you control a massive position with a relatively small amount of capital. But, and listen closely here, while leverage dramatically multiplies your potential gains, it equally multiplies your potential losses. It is the ultimate double-edged sword, guys.
All right, let's look at Section 3, who moves the market.
Just take a look at the massive institutional presence driving this thing. You've got central banks dictating national monetary policy, commercial banks handling these gigantic international transactions, and highly capitalized hedge funds. And then, way over there, there's a tiny sliver representing everyday retail traders like you and me. Understanding this ecosystem is absolutely crucial. As a beginner, you're essentially swimming in an ocean with whales. You don't try to move the market yourself, you try to catch the waves they're already creating.
Next up, Section 4, charts and analysis.
To cut through all that noise, you're going to need an essential toolkit. Reading the market means understanding market charts, things like candlesticks, trends, timeframes. It means getting a grip on the basics of technical analysis so you can study past market data to kind of forecast where things are heading next, plus understanding price action indicators. This right here is exactly how you learn to read the visual story the market is constantly trying to tell you.
Which brings us to Section 5, arguably the most important one, protecting capital. So, why do so many beginners lose money? It's a really sobering question, right? But confronting it head-on is quite literally the only way to avoid that classic get-rich-quick trap. Beginners usually lose because they over-leverage, they fail to set stop losses, and, this is a big one, they let emotions completely dictate their trades instead of cold, hard logic. And that's why risk management is all about protecting your capital. Honestly, this is the absolute golden rule of trading. Your number one job before you ever even think about making a profit is fiercely protecting the money you already have. Because, well, if you run out of capital, you're out of the game entirely. Simple as that. It's all about setting strict limits, sizing your positions correctly, and ensuring that no single trade can ever wipe out your entire account.
Finally, Section 6, starting your journey. So let's walk through a safe, step-by-step procedure to actually get you started. Step 1, open a demo account. This lets you trade with fake money, but using real, live market data. Step 2, choose a reliable, fully regulated broker. And Step 3, place your first trade. Practicing your strategies in a demo environment first is absolutely vital. It builds up that required muscle memory and discipline way before you ever put real, hard-earned capital on the line.
Because as this explainer shows, mastering the basic mechanics, understanding the big players, and locking down your risk management, that's merely the beginning. True trading is a lifelong journey. It's about continuous learning, constantly refining your strategy, and adapting to global economic conditions that are literally always changing.
So, we've walked through the history, the core mechanics of CFDs, the massive power of leverage, the global heavyweights, and the absolute non-negotiable necessity of risk management based on this comprehensive book. Looking out at the high-energy, constantly moving world of global trading, are you ready to grab the guide, open that demo account, and take your first structured step? Armed with this knowledge, what will your first move be?